Hi, in this video we will learn how to calculate the main KPI from a balance sheet or a P&L. First, let's create a readable template by using the P&L and balance sheet that we worked before. I will create a new sheet and I will give it name like KPI. Here we will have some balance sheet values and also we'll have the P&L values. Let's try to create a simple template, and for this I will erase that grid lines. And here I will write KPI. Let's give it a color. It'll be the same blue, bigger and bold italic. Good. First one. In a company that needs a good management for credit, especially because worldwide companies, when they sold something, they want to win customers, and especially big customers, they need to give them payment term. And here we can talk about many KPIs like account receivable, overdue, and we already talked about part of them into our course, especially on the balance sheet side. For this, we will try to find a way to explain the link between the credit activity, which will bring us the first KPI from our video. The name it's DSO, and DSO stands for Days Sales Outstanding. With other words, we have the number of days for a company, or let's say the number of days that a company needs to obtain money from sales transactions. So this is our first KPI, and for now let's give it a color, and that's it. The second one will be a DPO, which will bring us, let's try to copy the format, and here we will copy the details, but instead of sales we will have this time the number of days that a company needs to pay the suppliers. So we sell, but we also buy. The third one, it's DIO, which for us it's also very important because it gives us a good image of how many days a company needs to, let's say, give out the goods received in their warehouse. So number of days that a company needs to sell the inventory received in their warehouse. Good. So these are our main KPIs about that we will talk. Let's make it a little bit green. And now let's start to create the figures. We still need to talk about those others assets and others liabilities and equity, but those are some KPIs that we will link at the end because they are a simple percentage from our net sales value. So our focus will be on these three KPIs. Good. Here we will start by populate in the right side for 2018 and 2019. Let's try to insert a new row to be more readable. And here we go. Now, what it's important for us, it's that we can link the BS balance sheet and the P&L in order to calculate our KPIs. So, first one, DSO. For DSO, as the details told us, we need the account receivables because it's about sales values. So we need the account receivable from the total net sales value. Good. The figures may not be so real, but it's important for us to understand the principle and the calculation method. In our case, let's put the figures here. So 2018 DSO will be equal with the account receivable divided by net sales from P&L, and all of this we will multiply with 316, the number of days from 1 year. Here we go. This is the first KPI for 2018, and let's try to copy the formula, and we will have the BSD7, which is the 2019 end of balance for account receivable divided by net sales from E5 cell from P&L sheet, and then multiply also by 360. Good. Now we have the DSO for 2018 and 2019, and we already see that we have a decrease, which is great. Now let's try to move on to DPO. DPO, as the description say, is the number of days that a company needs to pay the supplier, and here we have equal the account payable this time, because we pay our suppliers, divided this time from P&L we'll take the COGS and we'll multiply with 360. And now you'll see a minus here, which is not good because we need to have the number of days, which cannot be negative. For this we will put a minus before the formula. Here we go. Now to simply copy paste, we'll see the results for 2019. So the first analyze can be like DSO decreased, which is good for our cash flow because we obtained in a faster way money from our customers, but in the meantime we pay our suppliers also faster than last year. Good. The good part is that in our case, for this calculation sample, we obtain money from our customer faster than we paid to supplier, which will give us the working capital. Good. Let's go to DIO. DIO, as we say, it's number of days that the company needs to transform the inventory, the goods received in their warehouse, into the sales. And for this, we will use, just like DPO, the value of the inventory divided by COGS. This time we'll take the inventory. So equal inventory divided by COGS, and for sure multiplied by 360. And the same thing like above, we need to put the minus sign. Format as a number by pressing Ctrl Shift and 1 from keyboard, decrease the decimals, and here we go. We have the number of days increasing from 6 to 4, which is awesome, because that means first we are more dynamics in the sales direction, and the second could be that we have some smaller costs for our warehouse, because we are many and we are efficiency. In this case, the calculations method show us that this company, it's in a good way, in a good direction. We also have last two indicators, which are other assets and other liabilities, that can show us in terms of percentages where we are. So other assets we will divide in the total net sales, and here we go. The same for 2019, and go now to liabilities from total of values. This time, as you can see, we don't have number of days, so we don't need to multiply with 360. We just want to see the percentage from our revenues, from our net sales, just to be sure that we are in a safe side for our company. Let's put them also some borders, and here we go.